Welcome back. 8 points higher, 14,574 is where the Nifty is trading at. December general insurance data, insurance industry data is out, and we've got Yash Jain joining us to take us through who's done better and who's a little worse off. Yash, take it away.
So Prashant, as far as the industry data for the month of December is concerned, looks pretty impressive. To take you through the headline numbers, December general insurance, when you see standalone health insurance and general insurance companies put together, has grown about 12% in the month of December on a year-on-year basis. Even if you exclude standalone health insurance companies, the general insurance companies have still managed to grow by 11%. Standalone health insurance has grown by 5% in the month of December on a year-on-year basis. Now, I'll tell you why this is important. This is important because this strong growth has come after a single-digit growth in the month of November, and in fact a contraction in the month of September as well as October. Hence this number primarily becomes important. Now, if you speak about ICICI Lombard, the December premium has grown by about 10.5% on a year-on-year basis. As far as year-to-date data is concerned, it's up by 4%. As far as New India is concerned, in the month of December, the growth is 16%, and on a year-to-date basis, it's up 3%. Two companies which particularly stand out, not listed but worth mentioning. The first one, HDFC Ergo, the December premium is up 40%. On a year-to-date basis, it's up 26%. And the next one is National Insurance. The December premium is up 42% on a year-on-year basis. Though the year-to-date basis, the premium is still down by about 5.5%.
Thank you, Yash. Santanu Chakrabarti, the head of BFSI Research and Senior Vice President at Edelweiss Financial Services, is also joining us to analyze this data. Santanu, what would be the key trends to track going ahead, and which stock would you like?
Right. So, thank you for having me. Firstly, I would like to say that if you look at the general insurance companies in India within this period of COVID and coming out of it, the one segment which has remained strong throughout, as you would expect coming out of a pandemic, has been the health insurance piece, which is why the numbers that you see for the monoline health insurers are absolutely eye-popping. 50 to 60% kind of growth across the board. If I look at the subset of health insurance for each of the large general insurers as well, the numbers are in most cases equally strong, if not on the benefit side, definitely on the indemnity side. Now, from a coverage point of view, we have coverage on ICICI Lombard and Bajaj General as a part of Bajaj Finserv. So, our preference within the sector, within the limited space that is available, has been ICICI Lombard. And we have also always believed that it is, on an average basis can be considered perhaps the strongest player within the sector. If I look at their numbers, they have posted a growth YTD of about 3.9% in their business, which given the fact that 61% of their NEP in the last quarter and 50% of their GDPI actually comes from auto, where the growth has been understandably a little more muted than it has been in fire and definitely health, is a decent number if you compare it with its closest large private competitor, which is Bajaj, which has actually posted a slight contraction. So we think that this opportunity of COVID is being utilized by the general insurers to lap up market share where they can. And the leaders are obviously participating strongly, if not as strongly as the monoline insurers. Having said that, our reservation in this regard has been that perhaps ICICI Lombard is erring a little bit on the side of caution, and we would like to see even more aggressive market share gain. If I look at the prevailing pricing data which comes in, perhaps there is room for prices to be trimmed a little bit selectively across a few products so that the growth can accelerate even further. ICICI Lombard has been our top long-term pick for the entire BFSI space. Our current target price is 1600, and it's been one of those ideas where we have recommended it as a 20-20-20 idea, that this is an idea that can give you 20% growth for 20 years while generating 20% ROE, and therefore not something to be traded in and out of.
Santanu, Yash here. Good morning. I wanted to ask you about two individual segments, health and motor both. Health saw some sort of, pullback because a lot of surgeries got postponed due to the pandemic. Motor was also muted. But now, as we come out of the pandemic, how do you see that factor working for health? What kind of growth would those delayed surgeries get to health portfolio for Lombard? And also motor as the sector starts picking up. Do you think these two biggest verticals would be able to take the general insurance industry as well as Lombard beyond that designated band of 12 to 15% growth?
A very interesting question, yes, and it's very much the question which defines the valuation of this stock. I believe the answer is yes, and if you notice, yes, we are already. I mean, in the pre-COVID times, we are already out of that 12 to 15% band. One of the reasons that the numbers have looked a little muted in terms of growth for Lombard in the last couple of years is that they have de-emphasized certain businesses like crop insurance, which they have almost completely exited. So as of now, in some sense, Lombard's portfolio is made up of businesses where it wants to have a core position going forward. And interestingly, auto definitely, there's been some cyclical weakness, but medical, which you name, and fire have been going great guns. And that's going to put the trajectory of growth for the overall revenue pie at a much higher number than the 15% which some people assume. For that to fully play out, of course, a little more aggression in pricing and market share gain will help. And one can understand the conservatism, given the fact that, the economic environment was not very clear to them going in. But I agree with you that their aggression will likely increase going out. And they are perfectly poised to flow for those actual developments to flow through to the top line in a major way. Now, specifically on health insurance, which you mentioned, we believe that COVID has been a mindset reset for the Indian population on both morbidity and mortality. That is, health insurance, or whether you look at the pure protection business in life insurance. Both have been beneficiaries of a crisis because as evidence across the world suggests through historical timelines, a crisis precipitates an understanding of personal risk at a level that no amount of education can do. 2 months of crisis is probably worth 10 years of education. And therefore, you're seeing accelerated adoption of those products. Finally, the fact that those surgeries have been postponed, etc., and people would have been a little more careful with their disposable income as well, probably were the only dampeners, and I expect those floodgates to open if the economy stays up. And ICICI Lombard is particularly well positioned to accelerate through that.
Take advantage of that. Thank you very much, Santanu, for taking us through what you make of that space. ICICI Lombard, your top pick, although you do think that valuations maybe are a little on the higher side. Yash, thank you for taking us through the data as well. We'll take a very quick break here. The market's given up the 20 points of gains it had, 14,560. We'll take a quick break. More on the other side.